Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right, so before we start with today's discussion, please allow me to mention about an offer that will reduce your capital requirements for trading various segments like the NSE futures and the MCX futures. Okay, talking about the NSE futures, you can trade contracts like Nifty, Bank Nifty, SGX Nifty, etc. with just 6,000 rupees for one lot, whereas in MCX you can trade one lot of crude oil, copper, natural gas, etc. for just 4,000 to 6,000 rupees. Okay, for gold and silver, it will cost you around 10,000 rupees per lot. And not only this, you will be happily surprised when you get to know the other features that are being offered. I can't give you all the details here as there are many, but I will surely share all the details post you get in touch with me. In today's scenario, if you want to trade one lot of crude oil, you need to have a minimum of 1.6 lakhs as your capital, that is 1 lakh 60,000. Similarly, for Nifty, for just one lot, you need to have at least 1 lakh as your capital. Now replace 1.6 lakhs with 4,000 to 6,000 rupees and 1 lakh with 6,000 rupees. It does make a lot of difference to a retail trader like you and me, right? So that's the help I want to extend or offer. And if you are interested, then you can get in touch with me on the details that are being shown on the screen and we can take it forward. All right. So out of the many technicals that are being used for technical analysis, Fibonacci is considered as one of the strongest technicals that works finely well with the price movements. Okay, and the fact is, Fibonacci actually works tremendously well on the higher time frames like the 1 day time frame or the 1 month time frame or the weekly time frames. Okay, but can we make it work on an intraday basis? That's the question. Okay, can we rely on Fibonacci levels while we are into intraday trading? Well, this is exactly what we will be covering in this particular video, and let's see how it pans out to be. All right, so we will be discussing the strategy based on the Fibonacci retracement. Okay, now if you are aware about Fibonacci, then you must be knowing that there are two things when we use Fibonacci. One is the Fibonacci retracement, and the other one is the Fibonacci extension. Now, for this video, we will restrict ourselves only to Fibonacci retracement. Okay, and even before we start, let me mention this very clearly that Fibonacci does work on the lower time frames, but we can't use it on very low time frames like a 3 minutes time frame or a 5 minutes time frame. The best what I have seen is that Fibonacci does work well in the 15 minutes time frame. Okay, but again, there are a few things that needs to be taken care of before we actually implement this in the live market. Okay, so whenever we are preparing a strategy, we have to lay down some strict rules, and based on those rules, we decide when and where to make an entry, where to place the stop loss, and when to book our profits. Right? The same goes with Fibonacci as well. And most importantly, since we know that this technical actually works more stronger in the higher time frames, we need to wait for some prerequisites to be filled on the charts before we actually draw the Fibonacci tool on the lower time frame, that is the 15 minutes time frame. Okay, in this case, it will be the 15 minutes time frame as I just mentioned. Okay, so the first thing that needs to be taken care is that the stock should be in an uptrend. I mean, I'm taking the example of uptrend just for this video. So whatever we will discuss in this video will be in reference to an uptrend, but the same can be used for a stock that is in a downtrend as well. Okay, so the most basic stuff that you need to know is how to draw the Fibonacci levels properly. Now, I'm not gonna cover this topic in this video because I have already made a detailed video on Fibonacci and would request you guys to search that in my YouTube channel and watch it if at all you are interested. Okay, if you don't know what is Fibonacci retracement and what is Fibonacci extension, okay, then please go ahead and watch that video. Okay, you'll be clear on all the aspects of Fibonacci. Okay, now one more important and I would say very important thing that needs to be known in regards to Fibonacci as far as this strategy is concerned is an additional level that has to be added to the Fibonacci tool. Okay. Uh, okay. I will just show that to you in some time. Let me continue with the further things here. Okay. I'll just show you what is that additional level that I'm talking about in some time. Okay. So coming back to the strategy, the first thing that needs to be taken care is that the stock should be in an uptrend. And you know it when you see that the high highs and the high lows are being formed on the charts, you know that the stock is in an uptrend. That is point number one. The second thing that needs to be taken care is you have to wait for a decent up move. Okay, and when I say decent up move, the move should be a bit bigger than a normal move. Okay, and post that move there has to be a retracement or an accumulation. Okay, and only then we will bring in the Fibonacci retracement in action. Okay, now one of the drawbacks that I see here is when we are waiting for the decent up move to happen, it might be the case that you would have actually encashed that move if you are using some other technical. But as I said, since we are trying to make Fibonacci retracement work in the lower time frames, this is a mandatory prerequisite that you need to follow if you are using the Fibonacci retracement strategy. Okay, and if you are someone who feels or knows that rather than waiting for that decent up move, I can actually trade that up move and encash it, then feel free to go with that particular trade. But make sure that you are not using the Fibonacci retracement strategy in that case. Okay, so as mentioned, we need to wait for the decent up move to happen, and post that when the stock retraces down, that is when we draw the Fibonacci retracement. Now, here is the catch. You remember I talked about an additional level before some time. So that's the catch. Normally, when people use Fibonacci retracements, they start with the level 0 and then level 38.2 and then 50 and then 61.8 and then 78.6 and then 100. Now, the additional level that has to be brought in onto the Fibonacci tool is between 0 and 38.2 level, and the level is 23.6. Make sure to add this level if you are using Fibonacci retracement for intraday trading. You will see most of the retracements to be happening either at 23.6 level or at 38.2 level or anywhere in between these two levels. Mind my word, guys, this is the key. This level has to be there if you are using Fibonacci retracement to day trade. Okay, now let's get on to the chart and let me just quickly explain what is the level I was talking about. Okay, let's make it blank. And again, this is the TradingView platform, and on the left hand side you have all the drawing tools. So in order to draw Fibonacci retracement, you go here and just click on Fibonacci retracement. And normally you draw the Fibonacci retracement if the stock is in an uptrend. Okay, let's do this. Let me bring in the pen, and let's say a stock is going up like this. Okay, and it faces a resistance somewhere here, and then it starts falling down. Now, Fibonacci retracement will be used to know till what point will the stock retrace down, and from where can it take a support and again start moving up. That is the whole purpose of using the Fibonacci retracement tool. Okay, now click on here, and normally the Fibonacci retracement has to be drawn from the day's low. If the stock is going up, if the stock is in an uptrend, then this is how you draw the Fibonacci retracement. The Fibonacci retracement has to be drawn from the day's low. So this is the day's low till the recent day's high. So which is the day's high? The recent day's high. Is this the one? No. Is this the one? No. Is this the one? Yes. So you go till here and click it and leave it like that. So now you have the levels here. So these are the levels I was talking about: 0, 38.2, 50, 61.8, 78.60, and below we have 100. Okay, so which is the level that we need to bring in? That is 23.6. So go to the settings. Oh, I'm so sorry. Just a moment. So go to the settings and just check the box 0.236. That will bring 23.6% here. This is the level that we want if we are trading intraday and if we are using Fibonacci retracement. I hope that is clear. So this was not there earlier. We enabled it. We checked the checkbox in the Fibonacci settings, and now we have 23.6. Okay, so this was the level I was talking about. Okay, now let me delete the drawing, and let me also delete the Fibonacci. Okay, now let's get onto the chart. Okay, so let me see if I'm missing on something. Mm, no, we are all fine. So yeah, so these are the two things that needs to be taken care of before you actually use the Fibonacci retracement strategy. Okay, now here on the charts, this is the 15 minutes chart for Tata Chemicals for 10th of August 22. Okay, now what exactly is happening here? What exactly is happening on the charts, if you can tell me? So the first thing, the first candle itself, it is a huge candle. See the range of the candle. The range of the candle is around 1010 to 1040, is around 30 points, and this is just a 1,000 rupee stock that we are talking about. A 1,000 rupee stock giving a movement of 30 points in the first 15 minutes candle is a bit not normal, right? It's a 3% move that we are talking about. So this is the move, the up move that I was talking about. Okay, so in the first candle itself, we got a move which is a bit bigger than a normal move, right? So we got a resistance here, right? So what exactly does this candle do? I'm so sorry. What exactly does this candle do? The candle, what it is doing is it is actually setting a resistance here. So as an intraday trader, you are not gonna initiate a trade unless and until this high is broken, right? So the market is on, and we are seeing some green candles and some red candles being formed here. And this candle, uh, that is the 10-15 candle. Just a moment, guys. Yeah, I'm sorry about that. So the 10-15 candle is the candle which actually tried to breach the day's high and close above the day's high. But did it remain superable in doing that? No. It did not close above the day's high. It closed below the day's high. So this is the candle which might interest you, and you might bring in the Fibonacci retracement tool to see till what point can this stock go down. So the stock is already in an uptrend. Now we are waiting, or now we are trying to find a point till where can it retrace down, and then it can go up further. So this is the time when you bring in the Fibonacci retracement. So this is the day's low, as I said. You draw it right from there till the recent day's high. So which is the recent day's high? This candle. 10:15's high is the recent day's high. So you draw the Fibonacci till there. Okay, and let me just go ahead and maximize the candle so that things are more clear. Okay, so this is how you draw the Fibonacci. Now see how beautifully the stock is taking a support at the 23.6% level. So that becomes a support. The 23.6% is a strong support in intraday trading. The 38.2% is also a strong support in intraday trading. And as I told you sometime before, most of the stocks you will see that they are taking a support at 23.6 or 38.2 or any point in between these two levels. So in this scenario, the first retracement happened till 23.6. It was not able to breach this support level. As a result, it went up. So you initiate a trade and you go long. Okay, now after that, after some time, let me remove this. After some time, it moved up and then again for around 30 minutes it was in a sideways consolidation. So now what is the new day's high? This candle's high is the new day's high, right? So now again you have to bring in the Fibonacci retracement and you draw it from the day's low till the recent day's high. Okay, here, just like this. And what do we see here? Nothing actually happens in this scenario because it is just making some candles and it is moving up. It did not take a support. Actually, it did not come down to take a support, so there was no retracement, right? So you can go ahead and delete this and wait for another up move, and another up move is this one, right? So when this high is reached, then you see a couple of candles coming down, and that is when again you have to bring in the Fibonacci retracement, draw it from the day's low till the recent day's high. So this is the day's high, right? Recent day's high. And then Fibonacci will tell you till what point can the candlesticks retrace down and what might be the support level. And as you can see here, it came down, took a support exactly at the 23.6 level and zoomed up. The same thing happened here also. It came down, right? Took a support here, zoomed up. But here, when we talk about this portion, you need to make sure that the Fibonacci retracement comes till here because the recent day's high has changed from this point to this point. So the Fibonacci retracement has to be drawn from the day's low till the recent day's high. And this is how it looks like. So how do you analyze this scenario? Now this candle, the 1:15 p.m. candle, actually breached the support level, that is the 23.6 level, and closed below it. So that tells you that it might go down further. So what is the next support? 38.2, right? And as I said earlier, you will see in intraday trading that most of the stocks take the support either at 23.6 or at 38.2 or any point between those two levels. And the same thing is happening here. So the stock is getting a support here and it is moving up. So where will be our entry? Now you cannot initiate an entry here or here. You cannot initiate the entry here. So you need to wait for the 23.6 level to be breached, which is acting as a resistance. Let the candle breach it and close above it, and then we will see when to take the buy entry. So this is the candle which actually breaches the resistance level, this candle, right? This is the candle which breaches the resistance level and closes above it. You wait for the next candle and you initiate a buy entry at the high of this candle. And then it moves up. So keep your stop loss at the recent swing low, right? Or below the support level, which is the 38.2 level. Two stop loss options you have. And the target is the recent swing high. So this is the swing high. So this will be your target. As simple as that. Okay, so I hope you got the point. Okay, now let's take another example. Okay, let me delete this. Uh, let's go for maybe IGL. that was a stock which actually gave a good move. Okay, so IGL, here it is. Okay, so now the day started again with a big green candle. We are talking about a 300 rupees script, and the first candle itself, 386 to 396, it was a around 10 rupees move for a 300 to 400 rupees script. So this move is not a normal move, right? So you will be interested at this level because it has created a resistance there. Where is it? Just a moment. This level. So you will wait for this level to be breached in intraday trading, right? And then we will see what needs to be done. Now, this candle is the one which actually breached the resistance and went up, right? So now we have to wait for the move and then we have to wait for the retracement, right? So it went up till here and after that it started retracing down. So this is the time when you bring in the Fibonacci retracement tool. Okay, let's bring it in. We draw it from the day's low till the recent day's high, right? And let me maximize it so that it will be more clear. Okay, and as you can see here, in this case also, it is taking a support exactly between the 23.6 level and the 38.2 level, right? It is taking a support right here. So your entry will be after this candle closes. So take a buy entry here and set a target for yourself. In this case, the target will be quite low because the recent swing high is this. So your target should normally be this. So in this trade, your target is quite low, but that should not be bothering you because you are in profit. Now, how much profit is it? That doesn't matter. Okay, just follow the rules, follow the process, and the profits will keep increasing as the days go by. Okay, so in this particular scenario, you are in green. Okay, now we'll wait for another up move, and then when it retraces again, we will bring in the Fibonacci retracement again. So the next day's high will be this candle, right? So move your Fibonacci retracement till here. And what do you see here? Nothing actually happens because uh, the script actually went sideways here, right? It did not come down. It actually went sideways. If you can see here, this is a sideways thing. Okay, it consolidated for some time and then it gave a breakout. So you have to again wait for that up move to finish, and then when again you get a couple of red candles, then again you extend the Fibonacci, right? So what is the point uh, for the next Fibonacci to be drawn? This candle's high, right? So extend your Fibonacci till the recent day's high, and what do you see here? Again, it is taking a beautiful support at the 23.6% level and it moved up again. So here in this case, your entry will be after the closure of this candle, right? You take an entry here, put the stop loss at the recent swing low, that is here, just below it, and your target will be the swing high, the recent swing high, which is this one, right? So this is your entry, this is your stop loss, this is your target. And you continue the same process as as in when the stock keeps making new day highs. Okay, so that is how you bring in Fibonacci to work for you. I hope that is clear. Now, one thing which I don't like about this particular strategy is you have to keep redoing or you have to keep redrawing the Fibonacci retracement tool because that is how it is being used. Okay, you have to draw it till the till the latest day's high. So if initially the day high is here and when a new day's high is made here, this one becomes invalid. So the Fibonacci retracement has to be drawn from this level till this level. Again, when there is a new high made that is here, this level becomes invalid. So the Fibonacci retracement again has to be drawn from this level till the new high. So that is how the tool works. We can't really help in that. But I hope you got the gist of using the Fibonacci retracement strategy. It does work. The only thing is you have to keep reworking on it. Okay. So This is exactly the thing which I wanted to discuss with you guys. Okay, I hope you got the entire point of using the Fibonacci retracement in intraday trading. Okay, if you have any doubts or queries, please feel free to ask me in the comment section and I will surely reply back to that. Okay, so that's it from my end, guys. And for the guys who have not watched my previous video, I have put in the video card on the top right corner of this video, the I symbol that you see there. You can click on it and watch my previous video. And as always, we request you all to like and subscribe to my YouTube channel. And also, please don't miss the ending of this video, as you will get some more information about HYIT that might be helpful to you in some way or the other. And please feel free to ask your questions or queries, if any, in the comment section, and I will surely reply back to them. And also, please do not forget to like this video if you liked it. Okay, so that's all from my end, and I will see you all later. Hope you all will stick back. Happy trading and take care of yourselves. Bye bye.